My name is Chintan Haria, and I am Head of Product Development and Strategy at ICICI Prudential Mutual Fund. Today, we are going to be speaking about offering in the smart beta space, which is the ICICI Prudential Alpha Low Vol 30 ETF FoF. The name is long, but the name itself suggests what you are going to get in this particular fund, and I'll of course explain in detail. But from an NFO perspective, we believe that this will suit most investors who are looking to invest in the equity markets for the long run. The objective of this NFO is to allow investors to participate in the equity markets within the smart beta factors. Now, what is smart beta, if you may ask? Smart beta is essentially a way of selection of stocks and weightages of stocks on the basis of certain factors. As you are aware, when a fund manager manages funds, there are various factors like value, quality, alpha, low vol, dividend yield, etc., which are used. This could be fundamental factors, technical factors, and a mix of those factors are used by the fund managers to create the portfolio. Much in similar lines, in last August, we had launched the ETF on Alpha Low Vol 30, and that is essentially a multi-factor. So we are combining two factors, which is alpha and low volatility. Now you may ask, what are these two factors all about? Alpha is nothing but those stocks which are doing well in the markets over the last 6 months and 12 months. And low volatility are those stocks which are stable. So in some sense, you're getting a portfolio of 30 stocks where the performance of the stocks is good and they are stable, right? So it's not the best performers, it's not the most stable stocks. It's a combination of these two. And we've seen in the past history that a combination of these two factors, alpha and low vol, if invested for the long run, has helped investors to participate in the market in a smart manner. That's why they are called smart beta factorial fund. If we see from an investment strategy perspective, like I said, the universe of stocks where this particular passive fund or fund will get invested. So the structure itself, first I'll explain. This is a fund of fund where the taxation will be equity. In that fund of fund, the fund, whatever money you give us, will be invested in the ETF, which was launched last August, like I said. And the ETF will ultimately follow the index, which is the Nifty Alpha Low Vol 30 index. It is 30 stock portfolio out of the universe of top 150 names, that is 100 names in a large cap and 50 names in mid cap. And every 6 months, the rebalancing will happen. So it's a mix between active and passive in some sense in terms of the portfolio construct. And from a suitability perspective, I believe all investors who are looking to invest in a fully invested fund can look at investing in the fund of fund. You may ask, what are the benefits of the fund of fund structure? The first and foremost benefit is that you do not need a demat account to participate in the fund of fund. You can pretty much invest in it the way you invest in a normal mutual fund, because the fund of fund is ultimately investing in the underlying ETF. You can also do SIPs, which is systematic investment plans, very easily, and that ensures that every month or every week, if you need to do investments, you can participate in this particular portfolio. Overall perspective, we've done analysis globally as well as in India, and we've found that these two factors, which is low volatility and momentum alpha, which is essentially taking care of those stocks which are delivering better returns, is something which the combination of that works very well. It's in some sense returns with stability, and from that perspective, it is a good fit for those investors who are looking to invest in equities for the long run. As always, market risks do play a role, but because it is a 150, the top 150 universe, only those stocks which have underlying derivatives, so means the portfolio is very liquid. And there is an inbuilt mechanism of having a 5% cap on the individual stock. So there are checks and balances within the portfolio construct and methodology, which will ensure that the risk elements are brought down. The equity risk and the market risk continue, but the structure of the portfolio has been created in a manner which will benefit you to participate in the markets in the long run through emphasis on these two factors, which is alpha and low vol. So every 6 months when the rebalancing is done, the stocks will be ranked on the basis of alpha and low volatility. The combined scores will be taken up and the top 30 names will be picked up. So it's a confluence of those stocks which have done well, and just let's say the stocks where the portfolio combined ranks of these 30 stocks is the best. So we believe that from an investor perspective, this is a good portfolio for having in the long run. The NFO opens on 1st of September, closes on 15th of September. And the way we are seeing it, the investors' interest in smart beta investing is increasing both globally and locally. And in the long run, this should fit your investment portfolio well. So do understand the portfolio. I think from our perspective, we believe this is a good fit among the passive space for the long run. And it has a good history if we do the back testing. And if we look at the forward as well, in line with the market growth which we are expecting in India, this should allow you to participate in those stocks which are winners and are stable. Thank you so much for your participation and listening, and do invest in equity markets for the long run. And we thank you for listening in.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.